Welcome to Smart Stock Watch. Today is October 28, 2025, and we're diving into Whirlpool's latest earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's great to be here to discuss Whirlpool's Q3 2025 performance.
Let's start with a brief introduction to Whirlpool. As a leading home appliance company, they have a strong presence in North America and are known for their iconic brands. They just released their third quarter results, and there's a lot to unpack.
Absolutely. Whirlpool has been navigating some challenging market conditions, but they've managed to deliver revenue growth and maintain strong fundamentals. Let's dive into the details.
Revenue and profitability overview. Let's start with the top line. Whirlpool reported net sales of $4.033 billion for Q3 2025, a slight increase from last year. John, can you elaborate on this?
Sure. The revenue growth of 1% year over year is primarily driven by new product traction in North America. Despite facing tariff challenges, Whirlpool has managed to maintain its market position and even gain some share.
And what about profitability?
Whirlpool's adjusted EPS came in at 2.09, beating the forecast of 1.41. However, the GAAP EPS was 1.29, reflecting some non-cash losses and restructuring expenses. The net earnings margin was 1.8%, down from 2.7% last year, indicating some pressure on profitability.
Operational efficiencies and future outlook. Whirlpool has been focusing on operational efficiencies. Can you tell us more about their cost-cutting measures?
Whirlpool achieved a structural cost takeout of 100 basis points, approximately $50 million. This is part of their ongoing efforts to streamline operations and improve margins, which stood at 4.5% for ongoing EBIT.
Looking ahead, what are Whirlpool's strategic initiatives?
They're investing in U.S.-based laundry facilities, which is expected to drive future growth. Additionally, they've declared a Q4 dividend of 90 cents per share, reflecting confidence in their cash flow generation.
Segment performance and challenges. Let's discuss the segment performance. How did Whirlpool fare across different regions?
In North America, sales increased by 2.8%, driven by strong share gains. However, Latin America and Asia faced declines of 5.2% and 7.3% respectively, due to macroeconomic challenges and volume declines.
And what about the small domestic appliances segment?
That segment performed well, with a 10.5% increase in sales, thanks to successful new product launches and growth in direct-to-consumer business.
Financial health and cash flow. John, let's talk about Whirlpool's financial health. How are they managing their cash flow and debt?
Whirlpool's free cash flow was negative $907 million, primarily due to increased inventory and operating expenses. They reported cash provided by operating activities at negative $669 million. However, they maintain a cash balance of $934 million, which provides some liquidity cushion.
What about their debt levels?
Long-term debt stands at $6.165 billion, which is relatively high. Managing this debt while improving cash flow will be crucial for Whirlpool moving forward.